Karina is switching to computers. Let me live stream this to my group while we're waiting on her to do that, okay? Very odd. And it gave it a few minutes for some of the stragglers to get on. Okay, guys, write this down in your notes, okay? How do I trade? How do I trade? Okay, there are two ways, guys. There are two ways that you make money by trading, okay? The first one is buying, okay? And that's when you believe that price is for a certain currency pair is going to go up. So you write this down, okay? You go long, okay? Buying is also called going long. Okay, that's one way that you make money. You think that price is going to go up, so you buy or go long. The second way that you make money, and write this down, is simply selling, guys. Selling. That means that you believe the exchange rate for a certain pair is going to fall. So you sell, or write this down, you go short. You go short on that pair. Okay, we're going to learn later how to decide actually whether or not you should buy or sell an asset. But just for now, I'm just introducing and covering the basic concept, okay? There's two ways to make money, guys. You're either buying or you're selling. A lot of retail traders start off misinformed. They don't fully understand what it is that they're doing or actually how the transaction works, okay? You guys are going to have an upper hand because you are informed, okay? Does it make it any simpler to understand at this moment? Okay, so here's a shortcut, okay? If you think price is going to go down, you sell. If you think that price is going to go up, you buy. There's fundamental universal laws in physics known as like the conservation of matter and the conservation of energy, which states respectively that matter and energy cannot be created or destroyed, only transferred. This applies to the financial markets as well when it comes to money, okay? For every winner, there's got to be a loser. Vice versa, for every loser, there's got to be a winner, okay? For any given market transaction, money is simply being transferred, okay, from one person to another. So now let's talk a little bit about account types, okay? When you open up a trading account, you have two options. One, write this down, you have a live account. That is where you either make or lose real money. And 2, you have a demo account. And your demo account is where you're either going to be making or losing fake money. Okay? A demo account is essentially a mock trading environment designed to allow retail traders to practice and learn without having to put real money on the line. Okay? Without having to put real money on the line. Okay? You are all going to start off your trading journeys with a demo account. Okay? It lets you practice actually in the live markets. It lets you practice live without having to risk real money. Okay? There is absolutely no benefit, guys, and you trying to go jump in the deep end with a lot of your personal equity, your money, invested when you're not ready. Okay? There's no need in that. There is no need in that. Furthermore, when you do begin trading on a live account with real money on the line, it's recommended you start off with minimal funds, okay, and trade only with disposable equity, okay? That means trade only with money that you can afford to lose, okay? Understand, guys, that consistent profitability in the markets is going to require experience all the time, guys. I have people jump in live accounts before they're ready, okay? Before they're ready, and it always ends up in disaster. They always end up blowing their accounts. You guys need time in demo, number 1, to learn what you're doing. Number 2, to learn your pair and how it moves and how it reacts. And 3, when you're trading in demo, it takes the emotion that is attached to your money out of it. It lets you think with a clearer mind, okay? Lets you think with a clearer mind and lets you take emotions out. Guys, that's one of the hardest things to do when you're trading in a live account with live money is to take the emotions out, okay? Write this down, guys. Trading platforms. Trading platforms. Trading platforms is simply just software that allows retail traders like you and I to access and trade in the financial markets, okay? There are many types of trading platforms out there to choose from. I'm just simply going to discuss some of the more popular ones, and then I'm going to tell you what we're going to use, okay? First, there is MetaTrader 4 and MetaTrader 5. We're going to use MetaTrader 4, okay? MetaTrader 4 is the most popular retail trading platform in the world, okay? We're going to be setting this up tomorrow night, okay? We're going to be setting up your broker accounts, and we're going to be using the broker MT4. We're going to put it right onto your computer, okay? And we're going to hook your account to it. Now, not tomorrow night, but Thursday night, we're going to be setting up the same thing on your cell phone, okay? We're going to be setting up the same thing on your cell phone so that you can do financial markets on the go. Then we have Trading View, okay? Trading View is Trading View is, it's newer and it's sleeker, but here's the thing about Trading View, guys. Trading View, you can connect to it anywhere you have internet, okay? Anywhere you have internet, okay? You just make an account and you log into it, okay? It's got a lot of cool features on it, okay? The downside to it is not a lot of brokers interact with it, okay? We are going to use Trading View. We're going to use Trading View, okay? We're going to use Trading View. But what we're going to use Trading View for is to practice and to mark up our charts, okay? We are going to use Trading View. And we're going to go over all the cool and neat little features that we'll be using, okay? I love Trading View, okay? Now, we're going to talk a little bit, write this down, guys, about brokers. What are brokers? What are brokers? Okay. Brokers are the entities that connect the retail traders to the financial markets via the platform, okay? The MT4 platform that you're going to use, the broker account that we connect to it is actually what's going to allow you to trade, okay? There are a lot of different brokers out there available, and you guys can write this down. This is some of the things to think about, okay, when picking a broker, okay? Spreads. That's the difference in the price where you want to take the trade and the price that someone is willing to trade with you, okay? It is the difference between the bid and ask price, okay? We're going to be going over that, okay? The difference between the bid and ask price is the spread, and that's what you pay the broker, okay? That's what you pay the broker. That's why every single time, guys, where you do actually place a trade, your trade is going to go into the negative, hopefully just for a little bit, okay? That's how you're going to, that's how you pay your broker, okay? Commissions. Now, there's small costs associated with taking your trade, and it's paid to your broker, okay? Each broker charges a different amount, okay? And also trading speed matters. Trading speed matters, okay? The speed of the connection to the live price charts, okay? Sometimes some brokers kind of lag a little bit. And when you trade indices like we do, you know, that's like the last thing that you want, guys, okay? All right. You're fine, Michael. You're fine. The next thing when considering a broker is asset options. Okay. Various brokers offer different instruments to trade. Okay. Some only offer Forex pairs. Okay. Some offer Forex pairs and maybe some cryptos. Okay. Some don't offer indices at all. Okay. Some offer a combination of all of them. Okay. Your withdrawal and deposit options. Okay. That matters. Your withdrawal and deposit options. Each broker has methods available to clients for depositing and withdrawing, okay, as well as the various fees for doing so. Guys, we're going to get you all set up to deposit and withdraw with Bitcoin. It's the fastest and it's the cheapest way, okay? It's the fastest and it's the cheapest way, okay? And unfortunately, you know, there's so many different things with brokers. What we are all probably going to set up and use so that we're on the same broker, so that while we're looking at the charts, we're looking at the same thing, is we're probably going to use Hugo's Way, okay? It has very reasonable spreads, okay? The fees are super duper low. It offers all of like the indices, the metals, US and UK oil. It really is just about the total package, okay? So we're probably all going to use Hugo's Way, okay? So guys, now write this down. Write this down. What are pips? P-I-P-S. Pips. What are pips? This is going to be a common term that you're going to hear, okay? Pips. It's defined as the smallest possible change in a price. The smallest possible change in a price, okay? Pips is an acronym for points in percentage, okay? For points in percentage, okay? It's very important, guys. You're going to be calculating your pips for each trade, okay? Your pips represent your profit and your loss, okay? and it's different pairs have different decimal places, okay? So it's very important that you write this down. Pips are calculated without using the last decimal position, okay? The last decimal position is a fraction of a pip, and it's called a pipette, okay? Let me see if I can pull up my whiteboard. Pull up my whiteboard. And I scratch, I'm sorry. All right, let's just say, maybe I can type. That would probably be better, my chicken scratch. Okay, let's just say that you are trading like, it doesn't matter, Euro NZD. Okay. The current price is 120.325. Okay. That's where price is at. All right. And you think that price is going to move up. It's going to move up to 120.789. Okay. If you take this trade and you win, how many pips would you have caught? Well, this is how you figure it out. First thing you do is you are going to drop the last number, okay? And then you are going to take the larger number and you're going to subtract the lesser number. Okay? So somebody pull up, I can pull up my calculator if my phone's not dead. If you took this trade and you won this trade, it's going to be a total of 0.43 pips, okay? It's going to be a total of 0.3 pips, okay? Mm-mm. I'm lost trying to. Um, Y'all right, it's 0.46. You're right. Let's do another one. Let me just draw. Okay, say we are, let me try to draw. Okay, say that we are going for a sale in UJ, okay? And price is at 146.772, okay? And you think that price is going to go down to 142 point, we'll say 551, okay? What would be the total pips? Y'all can drop it in the chat. Right. 4.22. While we are right here, let me, I can't find my, oh, there it is. Okay. While we are here, let me try to find something that'll help us. And I will drop it in the chat. Okay. All right. So write this down, guys. Spreads. We just talked about them a little bit when we talked about brokers. What are your spreads? Okay. What are your spreads? Okay. When you buy an asset, there has to be somebody on the other side willing to sell that asset. Okay. If you're going to buy something, you got to have somebody willing to sell it. Okay. And the other way around, if you're going to sell something, you got to have somebody on the other side that's willing to buy it. Okay. The lowest price, write this down, the lowest price that a seller will sell an asset, that is what you call the ask price, guys. That is what you call the ask price, the lowest price that a seller will sell. Okay. Now write this down. Okay. On the flip side, the highest price that a buyer will buy an asset from you, the highest price that a buyer will buy, that is the bid price. Okay. That is the bid price. And the difference between the two is your spread. Okay. And your spread is why your trade is always going to start in the negative. Okay. Spreads are naturally changing. We're going to learn how to look at them so that, you know, sometimes they're higher, sometimes a day they're higher than others. But the difference in the ask price and the bid price is your spread. And that's what you're going to pay your broker for your trade. Okay. Now, guys, write this down. Lot sizes. Lot sizes. What is a lot size? A lot size is simply, it's the term used to describe just how much of an asset you're trading at any given time, okay? We have got, let me write this down for y'all. We have got standard lots. Write this down. We have got standard lots. Okay? A standard lot, okay? This is what a standard, well, standard lot is. I'm going to draw. It is a 1.0, guys. And it is equivalent to what is going on? Okay, it's equivalent to $10. Okay? You've got a standard lot. It's 1.0 and it's equivalent to $10. Okay? And then you have a mini lot. A mini lot is 0.1 and it is equivalent to $1. Okay? And then, guys, you have what we call micro lots, okay? Micro lot, fiddlesticks, 0.01, okay? And it is equivalent to, sorry for the scratch, okay, 0.01. And it is equivalent to 10 cents, okay? So you've got your standard, it's a 1.0, it's equivalent to $10. You have got your mini lot, it's 0.1, it's equivalent to $1. And then you've got your micro lot, okay? It is 0.01 and it's equal to 10 cents, okay? So let's just see. If you were trading, okay? If you were trading and you were using, why is this doing this? A 0.07 lot size. How much would that be? Drop it in the chat. How much would that be if you were trading with a 0.07 lot size? Yep, it would be 70. It would be 70 cents, okay? So what if you placed a trade and you used a 0.24 lot size? How much would that be? Okay, remember, okay, this right here stands for the dollar amount, okay? And this right here is the 10 cents, okay? So you've got $2.40. So that's $2.40. That is a $2.40 per pip lot size. Okay? Let's try this again. Okay? I don't know why let's just say, let's let me type it. Maybe that'll help. Okay. Let's just say that you were trading and you were traded with a 0.62 lot size. How much money would that be? I just want to make sure you guys get this. How much money would that be per pip? Right, right. It would be $6.20 a pip. Okay. So what if your lot size was 0.53? All right. Just making sure y'all are with me. You're absolutely correct. $5.30. Now, what if you were trading with a 2.25 lot size? Look at your notes. Okay, guys, remember this right here is the $10. It's the standard, okay? This right here is the dollar. And this right here is the 10 cents, okay? So if you had a 2.25 lot size, it's going to be $22.50 a pip. $22.50 a pip. I had a couple people put $20.50. No, it's going to be $22.50. Let's do that again. What if you were trading with a 1.17 lot size? How much would that be? I want to make sure everybody is yes. Okay. That's what I was waiting for. You're absolutely right. $11.70. So just one more to be safe. What if you were trading with a 6.75 lot size? You're absolutely correct. Right. It's going to be $67.50. Okay. I just want to make sure that you guys got this before we go on. Okay. Okay. Now, over leveraging. Okay, I want you guys to write this down. Over leveraging. Okay, strongly discourage you from over leveraging your account. Okay, over leverage is a term that refers using too high of a lot size for the amount of money of equity in your trading account. Okay, we have we're going to be going through risk management. I'm going to be teaching you how much money to trade depending on the amount of money in your account when you start trading. Okay, generally, as a general rule, okay, for every one, if you're trading regular pairs, this is not indices. Okay, this is regular pairs. You will trade a 0.01 lot size per $100 in your account, okay? That is proper risk management. A 0.01 lot size per $100. That's 10 cents a pip per $100, okay? Okay? So that doesn't mean I've got $100 in my account. I'm about to stack 10 trades at 10 cents a pip. That does not mean that, okay? That means if you have $100 in your account, you trade one trade at 0.01, okay? Until you build that account up to $200. Now then, when you have your account up to $200, you can do 2 trades at 0.01, okay? Or you can do 1 trade at 0.02, 20 cents a lot size, okay? Do y'all get that? You're going to take the amount of money in your account, okay, and divide it up by however many trades you want at 0.01 lot size per $100, okay? That's going to keep you from blowing your account, okay? Now we're going to talk a little bit about time frames. People say, what time frame should I use? Okay? Well, you know, it just depends on what kind of trader you want to be, okay? We have got the scalping trading style. It involves entering and exiting very quickly, okay? Usually closing with a very small amount of pips each time, okay? Scalpers, they evaluate and execute their trades on the lower time frames, like the 1 minute and the 5 minute, okay? In order to make significant money scalping at a small pip rate, you've got to use a high lot size to compensate for the smaller pips that you're getting, okay? An example would be entering a trade. This is a scalp scenario, okay? Entering a trade on a 5-minute chart, staying in for 11 minutes and getting out and having caught 4 pips, okay? One of the notable advantages to this is, okay, you're limiting your exposure in the market, okay? When you're exposed to the market, meaning when you have open positions for a small amount of time, you potentially cut off the risk of things like unforeseen price fluctuations, okay? And large variations in your running trade, okay? And you can almost get like an instant gratification in knowing if your trades were correct, okay? You may be able to shave off a lot of your time invested in the markets because you're actively trading for a short, controlled period of time, and then you're done. Now, noticeable disadvantage is scalping can be difficult, okay? Because you're constantly worried about things like the cost associated with entering the trade versus the reward you're looking to gain. Okay, the spread and commission fees are more significant when you're only looking to close your trades a few pips at a time. And it could be too fast paced, okay, especially for beginners. People argue whether scalping is relatively low probability trading due to the unpredictable random nature in the minute chart and the price that you're reading on the lower time frames, okay? Scalping has its benefits, but just think, guys, you can make it really fast and you can lose it really fast if it goes the wrong way, okay? Day trading, okay? Day trading is considered the happy medium of trading styles. It's not too quick, but it's not too slow. You usually enter and exit your trades on the same day. Day traders don't like to hold their trades overnight or over the weekend, okay? They usually tend to trade like the 15-minute, the 1 hour, the 4-hour time frames. They don't typically take as many trades as scalpers do. And the caveat to this is day traders are typically securing more pips on a given trade. Okay. Donald Trump's tweeting. I have followed Donald Trump on Twitter because his tweets affect the markets so bad. So bad. Okay. Day trading allows you to take substantial positions in the market, okay, while you still have some limitations on your exposure. And you're not holding trades for days, okay? You're going to get some kind of quicker gratification knowing if your trades were correct or if they weren't, if they were going in the other way, okay? Spread and commission fees are usually not that bad, okay, with day trading. They're usually not that bad. Now, a disadvantage, it can be a problem, okay? It can be a problem for those who do not trade full-time because the middle time frames, it does kind of require consistent monitoring throughout the day. If you can't check the markets every like 1 to 4 hours, you're going to have a very, very difficult time successfully day trading, okay? Successfully day trading. Risk and reward go hand in hand, okay? You may be looking to catch more pips on a given trade, but you're also going to be risking more pips if it doesn't go your way, okay? Now that you're holding trades for hours at a time, then you're going to experience the fluctuations of your profit, okay? And it's going to have a substantial effect on your trading psychology, okay? It's going to have a substantial effect on your trading psychology. You know that trading with emotions? That's what I was talking about, okay? Now, swing trades, okay, write this down. Swing trades are where you hold trades anywhere from like several days to even months, okay? Even months. Guys, I have been in a Ethereum and Ripple long-term trade for 2 months now, just holding it. Just holding it, okay? This is usually executed off the 4-hour, the daily, or even the weekly chart, okay? There is significant exposure to the market, okay, with these types of positions. So you're going to have like a really good fundamental grip of understanding to have success at swing trading, okay? The biggest advantage is it requires the least amount of time on the charts, okay? You can even take trades based on the projection of a currency and only have to monitor it by checking it once a week or once a month. Of course, profits and losses are going to be a lot larger with this, okay, when you swing trade. So when you do swing trade, you're going to have more money in your account, more equity, okay, more equity. So, you're going to choose the trading style that is going to be best for you. I think probably more of what we're going to be doing is kind of like maybe a mix. It's called like an intraday trade where we trade, for a few hours at a time. I'm going to teach you about things like trailing stop losses and stuff like that. Now, if you are in my Telegram group, we do have signals that come out. And even signals, guys, I teach you that I don't ever want you guys to set it and forget it. If you haven't done your own analysis, if you haven't pulled that pair up and you haven't checked it against what you know to be true and agree with it, I don't even want y'all taking signals, okay? I want y'all to be the signal. I want y'all to become the signal, okay? I want you to be the signal, okay? So I don't even call them signals. I call them trade ideas. I have trade ideas put out by a master trader, okay? So when they put something in the chat, I want you to pull it up on your chart. Most of you have my software on your computer. I want you checking it against it, and I want you to see if you agree. Don't just blindly take somebody else's trades. I want you guys to have the confidence in yourself because guess what? Even the master traders, not all of her trades hit. We had about a month, and it was bad. and it was bad. But because we were trading together and we pulled them up and we analyzed them, we didn't take them all. Now they're better now. They're a lot better now. You know, just about all of them, well, at least hit, you know, the take profit one, but still, because you got in the habit of that like month or so, we were like, man, what is going on? To pull it up, check your own analysis. You got better at analysis. Okay. You got better at checking against the software strategy that you have. Okay. And you become more confident. Okay. It's all about building your confidence, guys. It is all about building your confidence. Now, tomorrow night, does anybody have any questions about tonight? About anything we've covered tonight or the night before? Okay, great, great, great. And you know, y'all should all be in my Pippin Superstars chat group. If you're not asked to be put in there, okay, hit me up on Facebook. Tomorrow night, when you guys come to class, I'm gonna say, I said it at the beginning of class, I'm gonna say it right now. When you come to class, come to Zoom on your phone, okay? Come to Zoom on your cell phone. Bring your computer, but come on your phone, because we're going to be setting up your computers, guys. We're going to be setting up your computers with your broker, with your demo account. Hopefully we'll have time to play around with TradingView. I'm going to show you how your MT4 works, all the little tricks and stuff, things that could happen. So it's very important, guys, that tomorrow night you come to class on your phone, bring your computer. Okay. All right. I love you guys. Homework for tonight is to go over and just refresh yourself. Just read over everything that we have been discussing over the last couple of days. If you have any questions that pop up while you're going over this, make sure you know you drop it in the chat. We're one big family. I will be up to trade with you guys for New York. Guys, the market's been crazy, and it's not just indices. It's been all of them, and it's with, you know, the election coming up, all this crazy news coming out. I'm not saying, I am not a political person, but I have learned to keep up with the political news. And I feel like, because I'm waiting on the, I had a student send me his why, and I felt it. I felt it. I am not calling names, okay, but I felt it. And his why was, I'm just passing the time for my Iraqi dinar to revalue. And I felt that in the soul. I felt it in my toes. I was like, I hear you, and I am exactly with you, guys. And the thing is like, you know, I don't know. I always say it's like when you go to vote for a president, okay, it's gonna be like the lesser of two evils. I'm trying to explain to my 12-year-old, you know, I was like, you know, Trump is a good businessman. There's a reason that he's a multi-billionaire. My opinion, he's just got a crappy personality, you know. And then she's like, you know, I'm like, well, okay, Chloe, do you want, you know, a good business person running the country that might have a crappy personality, or do you want somebody with a good personality that is a crappy businessman? You know, it's going to be the lesser of the two evils. Me and my 12-year-old in politics, like, we don't see eye to eye, because honest to God, I'm just for the revalue, okay? I don't care who is in office. I don't care. I don't care. I don't care. All I want is for my dinar to revalue. And I just know that if, I'm not even going to say the name, but if one of them is elected, that is not going to happen. So I am secretly rooting for the lesser of the two evils that is more likely to let my Iraqi dinar and Vietnamese dong and my Indonesian rupiah revalue. Am I not horrible? But I do keep up with the news. The economy's going to crap. Things that they're usually up, they're falling like crazy. You know, I trade indices. They're usually, you know, a steady climb all week. They've been like, boom. I hope so. I hope so, and I hope he revalues my damn dinar. And I love y'all. And I'll still get on class with y'all every night, but I'm going to be, when that happens, I'm going to be on some island I bought for myself somewhere where there's no coronavirus. Maybe I'll have Wi-Fi. I don't know. All right, guys. I'm gibbering. I'm jabbering. Look over your notes. Okay. You're so welcome. Look over your notes. I will see you in the morning for live trading with Coach Misty. Hopefully we catch some pips. And see you guys in class tomorrow night on your cell phone. All right, guys. Love you.